All right, so my next guest says this market's in a good space right now, but that road will get bumpier in September. And of course, uncertainty will remain with us, and that means investors should prepare for what he's calling financial winter. I want to bring in now RDS Wealth President, CEO Del Smothers. All right, it sounds worried. It sounds scary.
Sounds
financial winter sounds a little scary to me. So let's talk about it. Like we've got some of the key points that you've made about it.
Yeah. So I want to be clear. I'm not Jon Snow screaming, winter is coming by any means. But I'm telling you, this season historically in the S&P 500 is what we would call financial winter. We talk to our clients in this way, saying August, September, and October traditionally is the time that if things can break, they will break here. This is the time of year where we see a little bit of pullback. September historically, 56% of the time, negative.
Right.
I'm not saying that this is going to be this September, but if it happens, we need to be prepared.
All right. So, and I think the other point though is this is not like a calendar of seasons, right? Because typically when that happens, November and December are like summer. Like it's amazing.
Right.
So if you could weather the storm, no pun intended, you'll be okay.
That's exactly right.
But
and all the pun
But you're saying your emotions will be tested.
It will test emotions.
And the market
if
could
we're
pause.
not prepared for it, we need to understand that those emotions will be
tested. So
tested.
let's talk about the additional risk out there as well, because that's your seasonality. That's what happens enough to pay attention. But you're concerned there could be earnings disappointment, particularly NVIDIA after the bell.
And I'll highlight that one for us real quick, Charles, because I'm certainly not saying that NVIDIA is going to post less than stellar earnings, but if it's not everything that the investor expects, we could see negative price action, and that is not good for anybody.
You mentioned weaker job print. We also had a guest earlier in the show who talked about that as well.
Sure.
We know that historically when the Fed enters a rate cutting cycle, initially the market goes down because the economy justifies that, and then it makes an adjustment. So you're saying, hey, maybe, we get this weaker jobs, to get hotter inflation, and that might mean, okay,
well,
that's tough.
That's the thing. If we have weaker jobs and higher inflation, now the Fed is a little bit kind of deciding what it wants to do, and it's tossed between two decisions here.
Right.
The weaker jobs market is not as much a concern for me in the short term. It might actually help the Fed make their decision a little bit stronger, say, yes, we need to cut rates. If they get too bad, though, we could be in for trouble.
By the way, stretch valuations, I would put this here, right?
100%.
Right. If NVIDIA falls, struggles, then a lot of these other names that are trading in sympathy with the high valuations probably fall. Let's talk about some individual ideas, though. CoreWeave. CoreWeave came out the gate up 650%, sizzling IPO. Now it's pulling back, and people have a memory about the old IPOs, 2020, 21. A lot of folks lost money chasing these things. You think it's in a buy area now?
I think it's in a buy area. Anything under 100 for us is in a buy area, and I would not be at all surprised if we don't see significant run-up if NVIDIA posts better than expected earnings.
Right, and I used a chart from CoreWeave earlier with Beth Kindig from CoreWeave that using with NVIDIA. So the correlation, I understand.
Sure.
Apple, listen, Apple is Apple. We pulled up a 50-year chart or 20-year chart, whatever it is, it would look phenomenal. But recently it's struggled a little bit. The opportunity to own it.
Range bound, but this is an opportunity to own it. The biggest challenge for Apple right now is its AI innovation, or potentially even taking some AI technology from someone else with a partnership that would make this stock go higher.
They got enough cash. Why don't they just spend $20, $30 billion?
They definitely could. I think they have waited to see what needs to be done in the AI game, and whenever they make the move, we want to be prepared.
Okay, you like relative strength versus cap weight, right?
Sure.
So you like equal weight versus cap weight. I use this chart because I could use RSP by itself and the chart is up. But compared to these mega cap names, it's down big time.
Sure.
So the question is, do I get out of these names and get into this, which is underperformed dramatically, although recently it's trying to make a move here.
It'll move, yeah. So month to date, we actually are right with the S&P 500. Right. S&P 500 up around 11%. Equal weighted index is up around 8. Here's the thing. This is a financial winter move. For our clients that we talk to, Charles, at RDS Wealth,
this is how you insulate your portfolio.
This is how we insulate the portfolio. We take names that we made a lot of money on, we buy the index, and if we see those names that we like long-term drop, we buy back in from the index. This is the preparation for financial winter for our clients that we talk to that can't afford to lose the money that they have made in all of these years because they're in income phase. One thing about income phase, when you get there, losses hurt you more than gains help you, and you've got to insulate those as best you can.
Good stuff. You laid it out good.
Yes, sir. Thank you.
Thanks, Dale. Appreciate it. All right, folks, coming up, it's a love story.